Well, good afternoon. We are going to discuss today about leasing. About leasing, we are going to discuss. Leasing also a type of financing. Especially earlier, the banks, commercial banks were not handling the leasing. It was a service banking. It was told a service banking or merchant banking product. So those days, merchant banks, they were providing this facility or specialized financial institution leasing companies, they were providing this facility. But now, almost all commercial banks are providing this facility to the customers for various reasons. And in some cases, commercial banks have created, they have incorporated special leasing companies as their subsidiaries, to provide these leasing facilities to their customers. So anyway, now this also one of the important product. Is also one of the important product provided by the banking sector, leasing. So first, of course, we look at this product, leasing product. What are the basics? And there are some terms we are specially using. So the terminology, basics and terminology, let us look at. What is leasing? So this is a contract between lessor and a lessee. Let us see who is the lessor, who is a lessee. So a contract between a lessor and lessee for hire of a specific asset selected from the manufacturer or vendor of such an asset by the lessee. So it is a contract between a lessor and lessee for the hire of a specific asset. So the asset is selected by the lessee. The asset is selected by the lessee from a manufacturer or the vendor of such an asset. So the asset should be selected by the lessee. The lessor retains the ownership of the asset. Okay, so lessee is selecting the asset, but the lessor retains the ownership of the asset. The lessee has the possession and use of the asset on payment of specified rental over a period. So the lessee selects the asset from the manufacturer or the vendor. Then the lessor retains the ownership of the asset, and the lessee has the possession and use of the asset for which he pays specified rental to the lessor over a period, and the period should be more than 1 year. The period, so the lease agreement, the lease period should be more than 1 year. During that period, the lessee pays a specified rental to the lessor. This is leasing. Leasing activities in Sri Lanka are governed by the Finance Leasing Act, number 56 of 2000, and there are some amendments also. So leasing activities in Sri Lanka are governed by the Finance Leasing Act, number 56 of 2000. And there are some amendments to this act. So this is basically the meaning of leasing. So let us look a little more. Who are the parties involved? The manufacturer or the supplier of the asset. From him, the lessee selects the asset. So the manufacturer. Then the lessor, that is the bank or the financing institution. The bank holds the ownership, retains the ownership. Banks or the ownership. That is retain the ownership. We call it absolute owner or the legal owner. So the bank, that the lessor, is the absolute owner or the legal owner, we call it. Then the lessee, the customer, or the user of the asset. The lessee is the customer or the user of the asset. We call him registered user. So under this leasing arrangement, he is the registered user, and the bank which provides the facility is the absolute or legal owner. So the registered user, that is a customer, has the possession and right of use of the asset for a specified period. Unhindered use. So the registered user can possess the asset and use it without any hindrance for a specified period of time, during which he pays the rental to the absolute owner or the legal owner, that is the lessor, that is the bank. So this is the parties involved: lessor, lessee, and the manufacturer or the supplier of the asset. Lessor is the absolute owner or the legal owner. Lessee, the customer, is the registered user. He can possess the asset and use the asset for a specified period, during which he pays a rental to the lessor, the bank, the absolute owner or the legal owner. Leasing institution should have obtained license from the central bank. If any institution or financial institution, if they want to do leasing in Sri Lanka, they must obtain a license from the central bank. They must obtain a license from the central bank. So this is a basic information about leasing. Ownership of an asset under leasing. So we can see ownership of the asset. So ownership, their full ownership is equal to absolute ownership plus registered user. The absolute ownership is the lessor, that is the bank. Registered user is the lessee, that is the customer. And the absolute ownership, what does it mean? Legal ownership of the asset. So bank or the lending institution is having the legal ownership of the asset. And the lessee, that is the customer, what does he? Right of possession and use of the asset for a specified period. This is the leasing arrangement. So the ownership, now you understand. Now absolute ownership, registered user, absolute ownership or the legal ownership with the bank, that is the lender, and the registered user is the customer who can keep the asset, you can possess the asset and use it for a specified period. So what's the benefits to the lessor? So what are the benefits to the lessor? The bank, by granting this facility, leasing facility. What are the benefits to the lessor by granting this facility? Customer retention by satisfying important needs. Now, by providing the leasing facility, the bank can retain the customers by satisfying an important need. Yes, the leasing is an important need. The customer may want the vehicle to do his marketing, to transport the goods, or may want machinery for the production purposes. The customer prefer leasing facility. If the bank provides that leasing facility, that customer will be retained with the bank. Otherwise, the customer may go to some other bank which provides the leasing facility, or may go to a leasing company. So primarily, when a bank is doing leasing, the bank keeps the customer, retain the customer with them by providing this important facility which satisfies the customer's need. Similarly, important component in package of services. So when the bank providing various credit facilities, this is also an important component. In the package of credit services, it is also an important component. So the customer can obtain all the credit facilities under one roof. He no need to go to various places. Under one roof, the customer can obtain the facilities. Then absolute ownership. That is the legal ownership is with the customer. Sorry, with the lessor, the bank. Thereby, it reduces the risk. Reduce the risk. It reduces the risk. Absolute ownership or the legal ownership is with the bank, the lessor. So there, it reduces the risk. You can see how it reduces the risk. Later we can see. Then the rental. Customer is paying the rental for the use of the asset for a specified period. The rental, there is upfront rental or advance rental. When the customer obtains a leasing facility, the customer, if the bank wants, the customer has to pay advance rental. In advance some rental it has to pay, or the upfront rental the customer has to pay to the bank. So that is reduce the risk, and it is going to be interest-free fund for the bank, because this advance rental or upfront rental the customer paid to the bank will be kept as a deposit with the bank, and it will be recovered at the end of the facility. It will be recovered at the end of the facility. So this fund is with the bank, interest-free fund for the bank, the customer's deposit. So this is upfront advance rental, reduce the risk, and interest-free funds to the bank. Another benefit to the bank. That is the lessor. Then the interest income is coming. The lessor, the bank is getting the income, interest income is getting. Then rental payment. Really the rental payment under through leasing, advance payment. On the day of grant of the facility, the rental payment has to be made. On the day of the grant of the facility, the rental payment, if the bank is granting the facility to the customer today, today the rental will be, the first month rental will be recovered today. So that is a benefit to the bank, the lessor. In the case of loans, what is happening? The first repayment, first installment is recovered 30 days after the grant of the day. If we are granting a loan facility today, we recover the repayment, that is the repayment, yes, installment, after 30 days, after a month only we are recovering. But in the case of leasing, when we are granting the leasing facility today, the first rental we are recovering today. So it is also a benefit. But now, this is the original leasing arrangements. But now, some leasing companies, to attract the customers, even the first rental, they are charging after 30 days. This is an exception. But the real way, the leasing, the first rental should be recovered on the day the grant of the facility. Whereas in the case of loans, the first repayment, that is installment, is received 30 days or 1 month after the grant of the facility. But now some leasing companies, like loans, they are charging the rental 30 days after grant of the facility. It is an exception. Right. Then termination fee at the end. And finally, when the leasing period is over, the bank will say, the lessor will say, yeah, terminate the leasing. Terminate the leasing agreement. So the bank may charge a termination fee at the end. Bank may charge a termination fee at the end. So this is an additional income to the bank. So these are the benefits to the lessor. These are the benefits. That's why the banks are willing to provide these leasing facilities to the customers. Benefits to the lessees, that is the customer. What are the benefits? No capital outlay, 100% finance possible. If the customer is a company, want to purchase some machinery for their production function, for the manufacturing purposes, if the customer is good, the company is good, bank will provide 100% outlay. 100% the bank will. Customer no need to pay any contribution. 100% bank. So customers benefited, no need to put his money, which can be used for some other purpose. Bank will provide 100% value of the asset by way of leasing facility. That is possible. But it is in the case of good customers, it is possible. So the lessee's equity, usually in the case of loan, we see customer has to bring minimum 20% of his equity like that. But in this case, leasing, 100% bank is provided. So the customer, that is lessee's equity, can be used for other purposes. He can use it for other productive or marketing purposes. He can do it. Then, less security or collateral requirement. So in the case of loans, when a customer obtains a loan, there are, yes, collateral or security requirements are there. Depending on the customer's creditworthiness, yeah, that will be arranged. Collateral or the security will be arranged. Here, in the case of leasing, less security or the collateral requirement. Unlike the loan here, unlike the loan facilities, here the leasing facilities, securities also be obtained, but not like the loan facilities. The reason, the absolute ownership or the legal ownership of the asset is with the with the bank. Absolute ownership or the legal ownership is with the bank. Because of that one, banks are not requiring, not insisting the very high collateral or security requirement. Banks are not insisting. Reason, the absolute ownership or the legal ownership is with the bank. Under legal arrangement, if the customer fail, customer default, bank can, following certain legal procedures, can repossess the asset. We call it seizing. Seizing. Through seizures, bank can seize the asset, that is, repossess the asset by following certain legal procedures. So because of that, that is due to the absolute ownership or the legal ownership is with the bank. So because of that one, the banks are not insisting for very heavy collateral or security requirement. Then can obtain conveniently and speedy. So because of this thing, the leasing facility, the banks are granting in a speedy way they are granting. So the customer can obtain the lease facility very conveniently and speedy. In the case of leasing companies, private company, they visit the customers, they go to customers' home and obtain all the security, satisfying the security document and release the asset, grant the facility within 24 hours. Tap facility, they say, they marketing. like that they marketing. So can obtain conveniently and speedily than the loans by the lessees. This is another benefit to the lessee. So lessee, unlike the loan, the leasing facility can be obtained conveniently and speedily. Then the rental. Rental, the customer is paying the bank qualified expenses to charge against the revenue. In the case of loan, only interest can be charged. Now, in the profit and loss statement, under the expenses, in the case of loan, the customer can charge the interest as an expense. But in the case of lease facility, the customer can charge the entire lease rental. The lease rental, we will see later, is more than the interest. The lease rental consisting interest component plus capital component. Whereas in the case of loan, only interest component can be charged to the P&L as an expenditure. But in the case of lease, the lease rental, which has the capital component and the interest component, can be charged to the profit and loss account. Hence, so in the case of leasing, tax payment could be reduced legally. Tax payment could be reduced legally. Then fixed term rental. Once the facility is given, the rentals are fixed. If this throughout the lease term, lease period, that rental will be paid by the customer to the customer. So if there is any inflation or anything, the lease rental won't be increased. If there is any inflation. But in the case of loan, the interest rate may change, and if it is changed, then the customer may have to pay more payment, make more payment in the case of loan. But in the case of leasing, it is hedged against the inflation, because once fixed, the lease rental that is fixed, he will be paying the lease rental throughout the lease period, unless otherwise there is any other problem. So these are the benefits to the lessee. So the lessee also benefited, lessor also benefited. What types of assets could be leased? Now assets, we have said what type of assets. Any movable asset which has an economically useful life of more than 1 year, that is, can be leased. Any movable asset which has an economically useful life of more than 1 year can be, by it will qualify for capital allowance, depreciation. So it will, if it is more than 1 year, then capital allowance, that is depreciation, you can claim. So because of that one, the asset, movable asset, which has more than 1 year economic life, useful life. So examples: vehicles, different type of vehicles, machineries, equipment, different equipment, process plants, computers, ships, aircrafts, etc., can be the assets under these facilities. Land and any improvement to the land is excluded. That leasing is different. This leasing, we call it finance lease. So what we are handling, this is finance lease. The properties also, you can see, those are leased. So that is not coming under this category. So land, any improvements to the land are excluded. They are not coming under this finance leasing facility. Similarly, machineries to be fixed to the land can be considered. Precautions to be taken. So in the case of machinery, which is going to be fixed to the land, also can be considered. We generally say machinery is fixed to the land is considered as immovable asset, but in this case, that also can be considered under leasing with precaution, legal precaution we have to take. So there should be legal document. In case of repossession, the bank has the right to remove the item fixed to the soil and remove the machinery. So there should be some legal document. With that precaution, the machineries fixed to the soil also can be leased. So these are the assets that could be leased under this finance leasing facility. What are the types of leases? What are the types of leases? But we are talking about finance lease. Lease rentals are paid over a specified period, and some such paid are sufficient to cover the capital cost and interest of the lease and give a profit margin. So in the finance lease, the customer, the lessee, pay the lease rental over a specified period, and during that period, the sum such paid is sufficient to cover the capital cost and the interest of the lease. And apart from that, it gives a profit margin to the lessor. We call it amortization. That is finance lease. That's another type of lease, operating lease. Here, leasing company, in addition to undertakes to provide services which are vital to operation of the equipment. So, operating lease, the leasing company, in addition, providing the leasing facility, leasing equipment or asset. Apart from that, in addition, undertakes to provide services which are vital to the operation of the equipment, maintenance, replacement of parts, etc. Lessee use the equipment for short period. Lessee use the equipment for short period. Thus, it does not cover the amortization of the asset. So, the lessee obtain the lease facility for a short period and pay the rental. That rental, the sum of the rental lessee pays not sufficient to recover the cost of the equipment, does not cover the amortization of the asset. So the rental payments are higher to compensate of lease period, and from one operating lease, after that short period, it can be given to another person on an operating lease. So by that way, in more than one or two times, it can be given. So the total will be able to cover. And apart from that, there is a residual value of the lease asset under operating lease that will give the benefit to the lessor. The lessor will take the benefit of the residual value. So generally, these operating leases are big equipment like aeroplanes and cars, ships. These are given under operating lease. So there are also two types of leases, dry lease and wet lease. In the dry lease, no example, if you take a dry lease car, the driver and other services will not be provided. Only the asset will be provided. The other services, driver, etc., will be borne by the customer, the lessee. In the wet lease, in addition to the asset, other services and even the driver of a car also provided by the company. That is wet lease. So there are dry lease and wet lease. So different types of lease, finance lease, which is we generally provided the facility, banks and finance company, and banks and finance companies are also providing operating lease. Operating lease is for the big assets like aeroplane, ships, like that. And under operating lease, it is being given for only short period. And the lease rentals are high. Anyway, the lease rentals are not sufficient to cover the cost of the equipment plus interest but it will be given again and again. Thereby, it will be covered, and finally, there is a residual value of the asset that benefit go to the lessor, that is the bank. So these are the different types of leases. So in the case of lease facility, there is another item we have to look at it. Value added tax. We call it VAT in leasing. But there are some changes now in the VAT, in leasing, there are some changes. But anyway, this is some basic information. You better keep it in your mind. I will explain, I will tell you what are the present changes in regard to value added tax. The VAT, value added tax, an item, it is in present. One is the institution which covers, which charge the VAT, it should be VAT registered institution. So VAT registration is a must. The institution which is registered for VAT is only can charge the VAT from the customers. So there are VAT input tax. One item, VAT input tax. What is VAT input tax? VAT paid on purchases. When we purchase item, for certain item, if those are VAT registered item, then we will pay the VAT also. The consumer pay the VAT. So that is input VAT. VAT input tax. And then VAT output tax. That is VAT charged on sales. On sales, the selling institution charge on sales. That is output tax. VAT output tax. Earlier, the lending institution, when they charge a rental, they charge a VAT also with the rental. But now they are not charging by law. That is, earlier they were charging, but now that is removed. The lending institution, they are not charging VAT on the rental. That is a change. Okay. But when they purchase item, they pay the VAT input tax. Then VAT belongs to Inland Revenue Department. VAT belongs to Inland Revenue Department. There is another item, VAT credit. That amount allowed for claiming. That is the amount allowed for claiming. Whether it is VAT input tax or VAT output tax, that belongs to the Inland Revenue Department. Out of that one, the institution which charging can claim a certain amount allowed by the Inland Revenue Department. We see what is it. We can see what is it. So the value added tax, earlier it was an important item in the leasing, when we grant the leasing facility, but earlier the banks were charging VAT on the VAT output tax on the rental. With addition to the rental, VAT also charged on the rental. That is, we call it what output tax. But now that what output charge is not there, the banks won't charge any VAT on the rental. Keep it in your mind. VAT transaction. This is for the VAT registered people. So VAT unregistered people can't do anything. They have to pay whatever it is. So VAT transaction in regard. Example, A imports. So A import, when A imports an item, A is paying a VAT on the import price. On the import price, A is paying. That is VAT input tax A is paying. Then A sells that item. So A charges that output tax from the consumer on the sale of the item. So A, when import, A pays that input tax. When A sells, A charge that output tax from the consumer. So it is now coming to the B. B buys from A. So B pays VAT input tax to A. Then B sells. B sells, B charge VAT output tax from the other person C. Now C buys. C is the final person in the purchasing chain. So it consumes. C pays VAT input tax, ultimate payer of the VAT. The consumer is the ultimate payer of the VAT. So now there is VAT input tax, VAT output tax, you know the difference. When a person pays, when a person purchases, pay the VAT tax. If it is for the VAT item, if it is a VAT item, the person will pay VAT input tax. If he sells, if it is a VAT item, the charge VAT output tax. This is VAT transaction. Now take an example, manufacturing unit. item, so certain raw material. Then there will be water, electricity, utilities. Then there is administration and labor, the total cost. Raw material 1,000 rupees. So when it purchases, it pays VAT input tax, say 15%, or 150. VAT input tax it pays. Then utilities, 200 rupees, it pays 30 rupees for the utilities VAT input tax. Administration and labor, 300 rupees, so no VAT input, that is not eligible for VAT, so 0. So total VAT input, 180 rupees. On this item, 1,500, the company, manufacturing unit pay VAT input. VAT input. It has paid. So it goes to the Inland Revenue Department. This VAT input tax, the company manufacturing unit paid on this manufacturing. So this 180 rupees that goes to the Inland Revenue Department. Now sales. Cost of production 1,500. So that the company keeps a profit margin of 20%, 300. Selling at 1,800 rupees. This is selling at 1,800 rupees. 5,500 cost of production, keeps a profit margin of 20%, that is 300. So 1,800 rupees. Now it sells 1,800. It's going to charge by output charge from the consumer. 15%, 270. So gross sale price is 2,070. 2,070. So out of this 2,070, right, gross sales price, VAT 270, right, VAT credit claimed. So how much VAT credit claim? What they have paid earlier, that 180 rupees, VAT input tax, the company can claim that 180 from the Inland Revenue Department. That is VAT credit claim. We call it VAT credit. So this company has paid 180 rupees as VAT input tax when it purchased the inputs, raw material and other utilities. It paid. Now out of this payment, out of this charge, VAT output tax, it charges, it can claim. So 270 VAT output tax minus VAT credit claim 180, thus the VAT payable 90 rupees goes to the 9 rupees goes to the Inland Revenue Department. This is the working of VAT. VAT input tax, VAT output tax, and then VAT credit, which can claim. The company can claim the VAT credit. So here in this case, VAT credit claim. So this is 90 rupees on this chain of activities. 90 rupees is going to the Inland Revenue as a VAT payment. So this was there earlier for the leasing also. But now on the rental, the lessors, that is the bank and finance company, leasing companies are not charging. So not eligible for VAT. So these institutions are not charging VAT on the rental payment. Early. Maybe in future sometime. So this is through the budget. Through the budget they announce whether what is a VAT input tax, what is a percentage, what is a VAT output tax, what is a percentage, how is the VAT credit, all these things. Maybe in future they can come. We don't know. But this you keep it in your mind. But now it is not there. Then the leasing. Asset prices as per invoices. So leasing, the lessor is leasing the asset, movable asset. So there are certain prices they will take for the working. Sale price as per invoice. The supplier or the vendor will give the sale price of an asset. Maybe a car. The customer wants to purchase a car. So he will give sale price as per invoice. So in that case, there are two things: net sale price, that is sale price net of VAT, and then gross sale price with the VAT. So the vendor or the seller give the vehicle. Yeah, now they are giving together with the VAT they are selling. That is gross sale price. That is gross sale price. That is with the VAT. Price of the car plus the VAT together, that is gross sales price. If we know the VAT, what is the VAT? Then if we reduce the VAT, we call it net sales price. Net sales price. That is sale price net of VAT. Example, price of a car 1 million, net of VAT. VAT at 20%, that is input VAT for the purchaser, that is 200,000. So the gross sale price is 1,200,000 rupees. But now the sales, that is the seller or the vendor, give the gross sale price. They don't give the breakdown. That breakdown they won't give. Now, because now for this rental and other thing, we are not charging the banks or lessor is not charging the VAT output tax. So because of that one, gross sale price, that includes net sale price of the vehicle plus the VAT, plus the VAT component. That is gross sale price. Okay, now we have seen, so when you are purchasing a vehicle under leasing arrangement, you will get the invoice from the seller, the vendor, you will get the invoice. So the invoice, the vendor or the seller will give you the sale price as the gross sale price of the asset. He give the invoice, gross sale price of the asset. He will give. So on that one, you have to work out. Okay. Now we come to the meaning of rental. Lease rental. What do you mean by rental? There is monthly rental. Monthly rental. Monthly, the lessee, that is the person who obtained the lease facility, has to pay the rental. Monthly he has to pay. The first rental on the time of granting the facility, and thereafter every 30 days he has to pay. We call it monthly rental. Then in addition, at the time of taking the facility, customer may have to pay some advance rental. So advance rental we call it. Or sometimes we may call it upfront rental. Or sometimes we call it prepaid rental. Or we may call it paid up rental. Or we may call down payment. So these are the same thing, different name, different institutions may use. So advance rental, upfront rental, prepaid rental, paid up rental, down payment, these are certain. Yeah, they're all meaning same thing. That is rental made in advance to obtain the facility. Apart from that, one rental at the time of taking, they have to pay. So we may denote 1 plus 0. That means no advance rental, only the first rental the customer is paying. 1 plus 2 means 1 is the rental to obtain the facility, the first month rental, plus 2 advance rental. That will be kept as a deposit with the bank, and that will be recovered at the end of the lease period. So we mentioned 1 plus 0, 1 plus 2, or 1 plus 5 mean 1 is the first month rental that will be recovered immediately, plus 5 rental will be kept as a deposit, and that will be recovered at the end of the lease period. This is, advance rental. Apart from this one, there is another type of lump sum rental or balloon rental. So instead of 1 or 2 rental, some lump sum amount, bank may require, lessor may require the customer to pay a lump sum amount with the bank. So we call it lump sum rental or balloon rental, depending on the customer's credit worthiness. If the customer is a new customer who couldn't prove any credit worthiness to us, so there may be a risk element. So the bank can ask, you must pay some advance rental, maybe 100,000 or 200,000 as a deposit. So this is, we call it lump sum rental, and we say 1 plus 0. So 1 means this is a balloon rental or the lump sum rental. So these are the type of rentals. The lessor charging from the lessee. Then rental calculation. How to calculate the rental? How to calculate the rental calculation? There are manual calculation. There are special calculators for rental. There are special calculators for rental calculation. Then computer-based calculation, that is system. Now almost all banks are using the system, computer-based system for the calculation of rental. So the net rental, what do you mean by the net rental? And similarly, there is another gross rental. Net rental and gross rental. Net rental, if you take net rental, there is a capital component. That is, what is the cost of the asset? A payment of that component also included, plus the interest component. So the net rental will have two components, where the capital component plus interest component. That is, that will be known on to the bank or the lessor concerned. It won't be divulged or told to the customer. Customer will know only the rental. What is the capital component, what is the interest component, customer doesn't know. Bank or the lessor only knows in this facility, in this rental, what is the capital component, what is the interest component, banks only know. Customer knows only the rental. Customer knows. But in the case of loan installment, there is a capital component and the interest component, customer may know. But here, in the lease rental calculation, the lease rental, the net rental mean there is a capital component and the interest component which is known to the bank. Customer doesn't know, bank won't tell the customer also. Then the gross rental mean this net rental plus if the VAT is chargeable, if the VAT output tax is chargeable, that also included, and it is called as gross rental. But now, as I told you, there is no VAT component on the rental. So it is a net rental. There is no VAT component. There is no VAT output tax chargeable. Now, earlier we were charging, but now not chargeable. So now it is only the net rental that has two components. One is capital component and other one is the interest component. This is the rental calculation. Now, so lease rental manual calculation. Repayment as number of rentals. So number of rentals. Calculate the number of rentals. So this is the formula for the manual. AALF, that is adjusted accumulated lease factor. Adjusted accumulated lease factor. First you calculate the AALF, adjusted accumulated lease factor. Then the net rental is equal to lease capital divided by adjusted accumulated LF. Adjusted accumulated LF means number of prepayments plus this. Where N is number of installment, NP number of prepayments, I effective annual interest rate divided by 12 for monthly interest divided by 12. But manually, if you try to do, you may take about 1 week to calculate all these things. So manually, this is the formula. But there are calculators, special calculators to use this formula and calculate the rental or the computer system. So now the computer systems are there. Computer system will calculate it. But if you know this is the formula, this is for the calculating rental when there are a number of rentals and 2 rental or 3 rental as the advance payment or the prepayment rental. So this is the formula for the calculation. If you know this is the formula, that's enough. So you understand. You don't need to go and calculate by using this. Now, lease rental manual calculation, lump sum rental as a prepayment. When you pay 100,000 or 200,000 as a lump sum rental in advance, there is a different formula. Calculate the AALF, adjusted accumulated lease factor calculate. Net rental is equal to lease capital minus lump sum rental divided by AALF. This is the AALF formula. N is the number of installment. I is the effective annual interest rate divided by 12. So this one is for the lump sum rental as an advance payment. Other one is number of rentals as an advance payment. So two formulas. But if you try to do manually, it will take more than 1 week. So on the computers, computer specialists have put it in the computers. So through the system, when you press, you will get the net rental. You will get the net rental. Right. So these are the formulas. Then lease facility. There are some terminology. The lease facility, there are some terminology. Lease capital, quantum of advance. How much? What is the value of the asset which you are going to finance? Lease finance. That is lease capital. Then money advance to the purchase asset by the lessor. How much the money the lessor is going to advance to the customer to purchase them. Then net capital, net quantum of advance. That is lease capital minus advance rental. If you would have paid any advance rental, yes, reduce that one. That is the net capital. So lease capital, that is quantum of advance. Then the lease net capital, yeah, that is net quantum of advance. Lease capital minus advance rental. Then the interest. Effective rate. What is the effective rate? Then there is flat rate. The flat rate is, so you take that one, you take the interest rate, you take how much interest you paid during the lease period, then divided by the number of months. So what is the per month? What is the, and calculate for the 100%. So that is the flat rate, the flat rate. Then there is another word, unearned interest. The lease calculation, unearned interest and then earned interest. Actually, when we say lease facility, we take the lease capital, how much amount the bank is advanced to the customer to purchase the, plus what is the interest during that period. During the period, what is the interest? You will calculate through the computer system, you will calculate that. When you add up both, that is called as lease facility. Lease facility is equal to lease capital plus unearned interest. Common lease facility. Still the repayment not starting, so we call it unearned interest. When the lease facility is paid, that is lease rentals are paid, when the lease rentals are coming after one after another, the unearned interest portion will get reduced and the reduced amount will go as earned interest, unearned interest and earned interest. So in the lease facility, if we take the loan facility, only the loan. When we grant the loan, it is only the loan facility. If we are granting 1 million rupees loan to a customer, the loan facility is equal to 1 million. If we grant 1 million rupees to the customer to purchase an asset under leasing, then 1 million, and during that period, that is in the lease facility for 5 years, for the 5 years, what is the interest to be earned? We call it unearned interest. Add up both the lease capital, what the bank advanced, plus what should be the unearned interest that will be recovered. Then both together, we call it lease facility. So you know the difference between loan facility and the lease facility. Loan facility means only the loan capital. Lease facility means the lease capital plus the unearned interest for the period. Lease facility. Then when the unearned interest is paid, the unearned interest will be converted to the earned interest. So there will be unearned interest will be reducing and earned interest will be increasing. In the accounting books, the earned interest will be increasing when the lease rentals are paid. Earned interest component will increase. Unearned interest component will get reduced because the payment is coming. So lease facility is equal to lease capital plus unearned interest. Another way, you multiply the net rental by the number of rental. If the number of rental is 30, net rental is something, multiply that something by the number of rental, and you will get the lease facility. So here, the economic life period of the asset is important, and the lease period should be less than the economic life period of the asset. If the economic life period of the asset is 5 years, the lease facility should not go more than 5 years. It may be up to 4 years. So the lease facility should be limited to the economic life period of the asset. That is one thing. And then the residual value. At the end, there may be a residual value of the asset. Under leasing arrangement, that benefit of the residual value will go to the lessee. Lessee will enjoy that. So residual value at the end of the lease period, that benefit will go to the lessee. So these are the lease facility terminologies. Once again, lease capital, that is the quantum of advance. Money advance by the lessor to purchase the asset. Then net capital, that is, in other words, net quantum of advance, that is lease capital minus any advance rental paid by the customer, that is net capital. Then the interest, there is effective interest rate, then there is flat rate of interest. You calculate the total interest during the period and divided by the number of months and calculated for 100, that is the flat rate. Similarly, the effective rate, what is the interest rate you are providing? Then the unearned interest and earned interest. Unearned interest, during this period, how much of interest you will learn? You will earn during the period of this period, how much interest you will earn. That is unearned interest. When the lease payments are paid, interest component also will be paid. So when interest is coming, unearned interest portion will reduce. Earned interest will be earned, that will be increasing. Then the lease facility means lease capital plus unearned interest at the beginning. That total is called as lease facility. You know the difference between lease facility and the loan facility. Loan facility, the interest component is not there. Lease facility, the interest component that we are going to earn, that is unearned, we are going to earn, that also will be added to the lease capital. That is lease facility. Then economic life period of the asset, you must know, and the residual value at the end of the lease facility, the value of the asset, that is residual value. That benefit will go to the customer. Lessee, yeah. Yes. So this is about the lease facility terminology and the basics. I hope now you understand about the basics of the lease facility. Appraisal of lease proposals, basic criteria. appraisal of lease proposals. Basic criteria. So purpose of lease facility, why are we granting the facilities? For income earning activities. By using the machineries, they can earn income. So that is example machinery for the income earning activities. And then cost serving purposes we can grant. Vehicles. Now a trader to market his product, he is hiring a vehicle. Instead of that one, with a lease facility, if he purchases a vehicle, he can use that vehicle for his marketing purposes. Thereby, the hiring charges, he can reduce the charges on this distribution. Earlier, he was paying hiring, but now he is using his own vehicle obtained under lease. So, these expenses will be less than the hiring. So, cost saving. So, for the cost saving purposes. Then the professional use. Yes, the doctors can purchase scanning machine. Scanning machine, that is nowadays very not very much expensive. Yeah, so the doctor in the clinic, his own clinic, he can use the scanning machine or X-ray machine. That is professional use. And in the case of surveyors, the surveying equipment he can purchase. For the surveying equipment, professional use. Similarly, engineers can purchase various items for their use, professional use. So, professional use, professional equipment. Then, office, business, travel, office travel, business travel. So, company which is hiring vehicles, cars for transporting their officers, employees to various places for their work. So instead of, if they purchase a vehicle that can be used, the cost will be reduced. So office, business, travel. Example, vehicle. Actually, earlier there is a sentence, solely private use is not entertained. That is was earlier. But now, private use also entertained by the finance companies, leasing companies, and bank, and grant the leasing facility for the entire private use. Maybe a car for their private purpose. Yes. Then income earning or cost saving should be sufficient to pay the monthly rent. So when they obtain this lease facility, whether they are earning the income or whether they are saving the cost, that should be sufficient to pay the monthly rental. That should be sufficient to pay the monthly rental. So it's a purpose. So you must identify what is the purpose. Right. Then the customer. Banks primarily expect from the customer proper use and maintenance of the asset. So the customer should not, this is a lease asset given by the bank on the leasing arrangement. So I can't use it, I can use it very hypothetically. I no need to maintain properly. No. Proper use and maintenance of the asset, bank should satisfy the customer, use the machine, use the asset, proper use and maintain it carefully. And in addition, regular payment of rentals as agreed. The customer should make the regular payment of the rental as agreed. So the banking looking at the customer by this way, proper use and maintenance of the asset and regular payment of rentals as agreed. Basic facts to be established. Customer must establish the basic facts. Should be a credit-worthy customer. Whether he could be entrusted with a valuable asset owned by the bank and depend upon to adhere to the terms and conditions of the lease facility. Whether the customer should be entrusted with a valuable asset. The owner or the legal owner of the asset is the bank and dependent upon to adhere to the terms and conditions of the lease agreement. Whether the lessee, the customer, will adhere to the terms and conditions of the lease agreement. The bank has no control to ensure the value of the asset. Bank has no control to ensure the value of the ones given to the customer. Bank has no control because customer take the vehicle from here to Andhra, go to Mathura, transport item, go to various parts of Sri Lanka. The bank can't go behind the vehicle, no, behind the asset. So bank has no control. There is no physical control until the asset is repossessed in case of default. Yes, there is no physical control over the asset given to the customer until the asset is repossessed or seized in case of default. In case of default. So, bank has to take care of it. Bank has to take care of it. Creditworthiness of the customer. Bank should establish the customer's financial standing, customer's integrity, customer's management qualities, capabilities, experience in business. The banks would consider financial standing, integrity, management qualities, and capabilities, and experience in the business. Bank. Actually, the banks, commercial banks, are considered these aspects very carefully before granting the facility, lease facility. So, financial standing and integrity of the customer. Financial standing and integrity of the customer. So, bank is examine, conduct the current accounts of the customer. Conducting the current accounts of the customer. By looking at the current account, they can just see how the customer's financial standing, how he manages his cash, how he manages his account, whether it is frequently overdrawn, whether there are any check return, what is the minimum balance, what is the maximum balance, what is the average balance. By checking that one, conduct of the current account. That is one way to check the financial standing and the integrity of the customer. Bank will check. Then conduct of previous financial facilities granted to him or her. How he has behaved in regard to his previous facilities obtained from banks, how they are conducted. At the branch, they will check. Then default record unit, other branches. Now, earlier the banks have their own default record units. They will check there. But even the CRIP report is a very important thing that will give the financial behavior of the customer. The CRIP report with various branches, with various facilities and everything, the CRIP report will give. So that is a very, very valuable information. Then if there are any other sources, obtaining information from other sources, if any provided from the other sources also, the banks can obtain information about this customer, about his financial standing and integrity. It should be done before granting the facility. So, conduct of the current accounts of the customer and conduct of previous financial facilities granted to him or her by the branch, and check with the default record units and check CRIP reports for any defaults, yes, and information from other sources if any obtained. Customer's management capabilities. So if he is running a business, his management capabilities, because that is important, because they are planning to earn income by using this asset. So they must have capability, the management capability they must have. Then only they can earn income by using this asset properly. So his technical capability, his production capability, his management capability, his financial management, and availability of skilled staff in related areas, whether he has employed skilled staff in the relevant areas of his institution, thereby examine the customer's management capabilities. Examine the management capabilities. That is experience in the business. How far he is experienced in his business. Then only he can successfully conduct a business by utilizing this asset and earn income, and thereby he can repay the rentals as anticipated. When the customer has no established track record, really, when the customer has the established track record, yes, you will examine all those things. When he doesn't have no established track record, what you can do? Adapt the following. Restrict the rate of advance accordingly. Restrict the rate. So do not grant 100%. The vehicle, if the maybe the asset he want to purchase, maybe value is about 500,000. If it's a good customer, yes, you can advance up to 100%, 500,000 you can grant. But in this case, this customer does not have any established track record, so restrict it to 70% or 75% like that. Increase the security cover. Yes, obtain the good guarantors. Obtain good guarantors or any other collateral to cushion the risk. Obtain any other collateral. And intensify monitoring. Yes, after granting, monitor is very, very important. In this type of cases where established track record is not there or very feeble, intensify the monitoring. Monitoring is important. Or otherwise, decline the facility if the risk is unacceptable high. The risk is unacceptable or high, you decline the facility. But to see now, of course, almost all finance companies and leasing companies, they are not much looking about these things. Banks are looking at these things. Banks, when they grant the facility, yes. But the finance companies and leasing companies, they are not much looking at these things. Maybe the reason, absolute ownership of the asset with the bank. So when the customer default, they can seize. That's what you can see in the paper advertisement. So many vehicles are for machineries and vehicles for sale by the finance companies and leasing companies. Probably those are the repossessed, seized items. Seized item or repossessed item. Now the customer evaluation. So before granting, this is from the bank point of view, I am telling you how to grant the lease facility. Bank point of view. Yeah, actually, the absolute ownership of the asset is a benefit to the bank, the lessor. It is a real benefit to the lessor. Absolute ownership. If the customer fails, you can immediately repossess. But you have to follow certain legal procedures. You have to follow certain legal procedures, and you have to terminate the leasing. I will come to that one later. You can repossess. That is there. That benefit is there. But that is again expenditure. You have to spend money, time, all those things. So when you grant by proper appraisal, giving some weightage to the absolute ownership with the bank of the asset with the bank, give some weightage to it, and if you properly analyze and grant the facility, it will be less work for the bank because the lease rental will be paid regularly. Otherwise, if there are lapses in the evaluation, then it's a problem for the bank. But the banks are almost, they are looking at it. But the finance companies and leasing companies, of course, they are very, they give a lot of praise for the customer. Right. Anyway, customer evaluation, credit worthiness. This, of course, you would have followed our credit management program. Credit management program, you would have gone through all these customer evaluation, appraisal techniques, the tools we are using in loan facilities. You would have gone through it. But anyway, I am repeating it. I don't know whether you have followed our credit management program. If you would have followed, these things would have been there. But I assume you haven't followed, so I am going through. So, customer evaluation, credit worthiness, 12 C's for the leasing facility. Character of the customer. Yes. You must examine the character of the customer. His past record, examine the track record or the past record. How he was. Then capital, his net worth. His net worth, customer's net worth. If the customer's net worth is high, his integrity will be good. It's an assumption like that. Then capacity to repay. His capacity to manage as well as to repay. To manage his business and as well as to repay the facility. Capacity. So one by one, you must analyze about the customer. Then his credit experience. How is experience in obtaining credit and repaying? Obtaining and repaying credit experience. His cash flow. How is the cash flow? His chronological age, whether he is old or new, whether his enterprise is old or new. Chronological age. Then capability. His customers' various technical, managerial, financial, marketing capabilities. Similarly, his competence, how competitive he is, his competence. Control, how he control his enterprise. And course, sailing, how the financial management is going on, how the financial position of the company or the enterprise going on. The constraint, what are the constraints he is facing? How is the competition he is facing? So by this way, you can, by 12 C's, you can examine the customer's credit worthiness. If all these things give a positive, or most of the things give a positive feedback, then you can be consider this customer's credit worthiness is somewhat acceptable. Somewhat acceptable. You can consider positively. Micro and small businesses, 5 C's. Small businesses. Character, capacity, capital, condition, collateral. Yeah, this also we have learned in our credit management program. Character of the customer, capacity of the customer to repay, and capital, how much capital he requires, how much equity capital, then what are the conditions, and collateral, what are the other collateral he can provide, other security he can provide for the facility. So by this way also, for micro and small businesses, by using this 5 C's concept, you can assess character of the customer. So this is very important. Whether he is willingness to repay, whether he is willingness to repay or settle the facility. There are willful defaulters. There are non-willful defaulters. Some defaulters due to some uncontrollable reasons, they fail to repay the facility. So there are some customers purposely, willful defaulters, willfully they default. So that difference you have to find out. So micro and small businesses, these 5 C's is important thing. You can use it to analyze. Then micro and small businesses, there is another tool, comparing. This also we have learned in our credit management program. C, character of the customer. A, ability of the customer to manage the business. M, margins. What is the profit margin he has? How is the interest component? How is the interest? What is the profit margin he has? Then for what purpose? What is the purpose he wants this facility, this lease agent? What is the amount he expects for leasing? How the repayment? And what is the insurance or the security he provides for this facility? This is compare. by using this tool also, you can evaluate or appraise the customer. Once again, see character of the customer. This is again very, very important. Primarily, the character of the customer should be good. He should be a non-willful defaulter. He must have the willingness to repay. He must have the willingness to repay whatever the facility he obtained. So that of course you check from the various things, you can check that one. In his ability, capacity, in the margin, the profit margin he is having, or the interest margin, interest, in the purpose, for what purpose he wants this lease facility, how much amount he wants as lease facility, how the repayment, then insurance or the security. Then papers, there is another one, another two. That also micro and small businesses, you can use this one. P purpose, A amount, P period, then E expertise. His expertise on character, commitment, capability, technical management, financial management capabilities, how his capability, his expertise, and then repayment, how the repayment of the facility, then S security, analyze the papers, analyze, find out customers' credit worthiness, whether the customer is, will pay this facility regularly. Then parser, there is another tool. These are various tools developed by senior managers to assess, to evaluate or appraise the credit facilities to the customers, various customers, maybe a person or a sole proprietorship customer, or maybe a partnership customer, or maybe a company, private limited liability company, that type of customers, to assess their credit worthiness. In case if we are granting the facility, whether they will repay that facility. You assess that one. There are various tools, 12 Cs, 5 Cs, then Campari, Parser, Papers. These are various tools developed by those days senior managers. So you will be able to analyze without any problem in a systematic way. So this is for you to facilitate, for you to evaluate the credit proposals in the systematic way, leasing proposal in a systematic way. Parser, P person, A amount, repayment, security, expediency, that is again experience or technical capability, and the remuneration, how much that he will get, what is the income, so remuneration. So this is Parser. These are various tools for you to, we are using in credit evaluation, that is loan or whatever. Similarly, in leasing also, you can use this to evaluate the customers repayment with a credit worthy customer. Then, in the case of corporate customers, corporate business, there is 5 pillars method. 5 pillars method that also we discussed in our credit management program. First is the environment, then the industry outlook, with corporate customers, big companies. Then industry outlook, within the industry, competitive position of fewer customer within the industry. Then the financial risk, then the management risk, and finally credit structure and collateral quality. So these are, there are actually the first one and 2 are together. Environment and the industry outlook is a common factor for the country. For the country, the environment and the industry is common. It's a common. And then the competitive position, that is applicable to the company, customer. Financial risk, applicable to the company, customer. Management risk, applicable to the company, yes, customer. Then finally, the credit structure and collateral quality for the customer. So the first 1 and 2 we can take together. So then that is 1 and 2 is together 1. Then competitive position 2, financial risk 3, management then 4, credit structure and collateral 5. We call it 5 pillars of credit evaluation. So this use it for corporate customers. So leasing facility for the corporate customers also, you can use this. You can use it and analyze. Then the new projects, SME customers, new projects, SME customers. So there is, of course, you evaluate the market evaluation, because they are new customers. They don't have the established record. SME customers new to the business, maybe young or new, or they would have been in operation for about last 4 or 5 years. Like that. Then their marketing evaluation, how they are marketing. Their technical evaluation, how is their technical capability. Then financial evaluation, how they are on their financial management. Economic evaluation, how far this project is beneficial to the economy of the country. And the environment evaluation, how this project is compatible with the environment. All these things we will analyze. Compatible with the environment. The project. Sometimes some projects are not compatible. They may create environmental pollution problem. So all these things you have to examine. So these are the various tools to evaluate the customers, maybe persons, maybe sole proprietorship, maybe partnership, maybe a private limited liability company, maybe a corporate public liability company, corporation, like that. You use these tools to evaluate and decide whether to finance. So in the case of leasing facility, use this and you decide. Assets. Now we come to the customer's evaluation. Now it is over. In the case of financial leasing facility, how to assess the customer. That is over. Now assets also we have to assess. There are different types of assets. How to assess the assets. We'll come to that one. Before that, we take a short break. Now the time is almost 3 o'clock. We meet by about 3:15. Take a break. 3:15 we meet. Well, let us continue. Now, let us continue this one. So, we have seen the customer evaluation we have done. How to evaluate the customer. Various tools we can use it to evaluate the customer. Various tools. So, thereby you must evaluate the customer's creditworthiness and decide. Similarly, now the assets also should be evaluated. Assets which you are going to give to the customer also should be evaluated. Basic criteria, assets should be essential for the business of the customer. The customer is a business customer, it should be essential for the customer. Business should generate additional income or reduce cost. Cost should be reduced to cover the rental payment and to meet maintenance cost. So it must generate additional income, or if the customer is using to reduce the cost, then it should cover the rental payment and to meet the maintenance cost. So that means the use of this asset should be profitable. Use of this asset should be profitable. And then should have an appreciable residual value at the end of the lease period. Should have an appreciable residual value at the end of the lease period. So that benefit should go to the customer. That benefit will go to the customer in the case of finance leasing. We have seen finance lease, in the case of finance. In the case of operating lease, of course, that benefit will go to the lessor, the bank or the financial institution. In the case of operating lease, finance lease that benefit will go to the lessee, the customer. And then another important aspect, generally consider less risky assets for lease financing. Less risky assets for lease financing. Right. This is the basic criteria about the assets. Less risky assets, some examples. Yes. Good brand name, popular model. So in the case of cars, if you take good brand name, popular model, Toyota, like that. Not a new introduction to the market. We don't know about the background of that asset. Not a new introduction to the market. We have to wait and see how the product, how the asset will fare in the market. Has a good demand in the resale market. Yes, has a good demand in the resale market. The resale market, there are certain items will have a good demand. So you must know whether this asset has a good demand. Some example, less risky assets. Does not go obsolete soon, like computers, etc. So computers very soon go obsolete. Or computer items very soon go obsolete. So does not go obsolete soon, like computers, etc. Has longer economic life. The depreciation period should be longer. It should have a longer economic life. That will be preferred by the customers. Does not have complex technology. Complex technology means if anything goes wrong, then repairing, servicing, maintenance will be very difficult. Sometimes you may be not in a position to use the item for some time or completely. So does not have complex technology. Operations are not hampered by various conditions. Maybe certain conditions, environmental conditions, the operation of the machinery will be hampered. Certain economic, certain environmental condition may hamper the operation of some certain machineries. Does not. Has efficient after-sale service and warranty through reputed agent. So the supplier of the machinery should have efficient after-sale services and also should have a warranty through reputed agents. So reputed agents should be there and the warranty should be available and have a very good efficient after-sale service for that asset. Has a steady supply of spare parts, preferably from more than one source. Yes, the spare parts availability. Sometimes spare parts for certain model, certain item are not available. Then the asset will be idle. You won't be using. That happens. So spare parts should be freely available and from preferably from more than one source, and then easily identifiable or traceable. And yes, chassis, the chassis, there are chassis numbers are there. So that type of thing easily identifiable and traceable. We will be in a position to trace. We will be in a position to trace the asset. If it is just then easily traceable or easily identifiable. So these are some qualities of less risky assets. Asset, if the risk is high, what can we do? If the risk is high, adopt suitable strategy or strategies based on customer risk analysis. Based on the customer risk analysis, you must have a balance. Decrease the rate of advance. If the asset is high risk asset, decrease the rate of advance. Don't go for 100%, decrease the rate of advance. Increase the security covers. Security cover increase. You ask for guarantors. Intensify monitoring again. Intensify monitor. Decline the facility if the risk is unacceptable. If the risk is unacceptable, if you think no, this will go wrong, the customer may not repay the rental, so it will be a problem case. So decline the facility if you think the risk is unacceptable. Decline the facility. Asset with limited usage. There are some assets, they have limited usage only to particular sector, only to a particular sector. Some assets are specific to certain sectors. Risk in these sectors should be assessed as resale value of the assets are limited. Actually, we must consider it before granting the asset on lease facility. We must consider the resale value, whether it has a good resale value. Even if he repossess, if the customer failed to pay the rental, in case if he repossess, it should have a resale value. So you have to be. What are the assets in what are the sectors? Agricultural assets, industrial assets, passenger transport, goods transport, constructions. So these equipment and assets are only to those particular sectors. Only to those particular sectors. So they have limited usage that cannot be used in other sectors. So the resale value also limited to that sector. Then you have to take additional precautions. You have to take additional precautions. But agricultural sector, seasonal income, agricultural seasonal income. So agricultural equipment, when you give, the income will be seasonal, not the round the clock, not the round the year income. It will be seasonal. Rental payments to be adjusted or arrangements to be made to save money to make the rental payment during lean period. Yeah. So you have to adjust the rental payment to make during the seasonal income time. That is one way. Seasonal. So they have to make a big payment, big balloon rental payment. Rental payment to be adjusted, yeah, to make the payment during the seasonal income time. So that should be a big payment, balloon payment. Or arrangement to be made to save money. When the income is there, they must save money, keep it in the deposit to make the rental payment during the lean period when there is no income to recover. So when they get the income, seasonal income, pay the rental and the balance money they have to save. And when the income is not there, that is we call lean period, we can recover the rental from that deposit. So we have to make some arrangement. That is one way, one problem. And agricultural assets, high wear and tear. High wear and tear. And certain assets are not easily identifiable. Certain assets are not easily identifiable. No registration number. No registration number. Now, now, in the case of agricultural sector, one good example, combined harvester. Combined harvester. Paddy harvesting and various other harvesting purposes, there is a combined harvester. People have imported from, companies have imported from India, combined harvesters, and a lot of people have purchased through the lease facilities. They obtain through the lease facility, they obtain these combined harvesters. Combined harvesters only for certain season. The season may run into 2 or 3 months only. So during that time only they will work around the clock and they will earn a good income. And the rest of the period, rest of the year, no income. So you must make arrangement to recover the lease rental even during the lean period where there is no income for them. And some people, they operate in certain areas, particular months, the harvesting. When that harvesting is over, the harvesting will commence in certain other areas. They move the machine to those areas. Similarly, around Sri Lanka, various places, they move the machine and get the work, harvesting work. That is one aspect. Some people, they do and they pay. Some people, they don't do and they don't pay. So many combined harvesters, the facilities obtained were not repaid, and ultimately the lending institutions have to repossess. That has happened in the past. Apart from that, some combined harvesters illegally they have sold out. There is no registration number in those combined harvesters. So identifying the combined harvester also difficult. Identifying combined harvester also difficult. So these are the problem faced by. So you must exert certain very caution when you are granting these facilities, assets, agricultural sectors. But there is another one, tractors. Those are also agricultural equipment. But those tractors can be employed in various other sectors also. Transporting valley, transporting gull, construction material transportation, those things. Transportation work also that can be. Not only plowing and agricultural work, various other work also can be done through the tractors. So they will earn income continuously. But certain assets, very specific to those sectors, they earn income only during particular period. Rest of the period, rest of the year, they don't have any income. So these are the precautionary measures you have to take. Assets, passenger transport sector, buses. This is also only for the particular sector. It's also only for the particular sector. Route permit is essential to operate, yes. And without the route permit, obtaining route permit is also very difficult. Now, because so many buses are operating in the same route, so the authority are concerned about that one. So without the route permit, if you grant the facility, it is a big problem for you because they don't have. They have to use it for only for the special location, maybe wedding to transport people, or maybe excursion, taking people from one area to other area on like local tourism. That won't bring more income. That won't. So route permit is essential. Without the route permit, if you grant the facility for the passenger transport, it's a big problem for you. Time schedule of operation. Time, busy time and versus lean time. Even they have the route permit, there is busy time and lean time. Morning, evening, busy time. And noon, there may be lean time. So in a day, if the vehicle, passenger transport running up and down during the busy time will earn more. Running during the lean time, they won't earn much. So that is another problem. Road condition. Those days, road conditions were very bad. Now, most of the roads are good. That is one way. High wear and tear in poor rural roads, especially certain rural roads are still poor condition, very poor condition. In those roads, it is high wear and tear. The expenses will be high. Overloading and constant use, and these buses are overloading. They are overloaded. Even there is Corona pandemic, COVID pandemic. The authorities advise in a seat only one person can sit in a seat, but it is overloaded. There are standing passengers more than the seated passengers. So overloading and constant use, the high depreciation. It is high constant depreciation. Constant use, high depreciation. Then passenger occupancy, analyze. You have to analyze passenger occupancy critically and examine what the income they can earn. What is the income they can earn? And then in the buses, they are putting the hired employees. Driver also hired, conductor also hired. What happened? Misuse. Then high occupancy, high maintenance cost. High maintenance cost. The hired employees misuse, pilferage, accidents. Then difficulty in identifying the asset alteration. Sometimes the engine number, chassis number, they alter, obliteration of engine and chassis number. They change it, obliterate. So management quality and experience is important in this type of passenger transport service, passenger transport assets. When you are considering passenger transport, these are the risks. These are risks you have to examine. Very passenger quality management quality and experience is essential, very important when you consider passenger transport assets for your customers. Leasing, major risk. In the case of leasing, there are major risks. Business failure, yes. Slowdown of the business, resulting in reduction of income. There may be internal and external factors due to the reduction of income. And the business failure, maybe business failure. These are the risks. Management problem, production problem, financial problem, marketing problem. So due to these internal and external factors, there may be business failures, slowdown of business. So income also reduce income. So asset may lost. Sometimes assets may lost. Asset may meet with the accident. So you may get the insurance, but with the repair and that will take months and months. No income. The repair and other thing take months and months. No income. How are you going to repay the rental? So you must analyze very critically whether this person is capable to handle this asset. They operate their business successfully, carefully. You must assess. In the risk mitigation, in leasing, risk mitigation avenues are very few. Hence, appraisal should be done with great care. Appraisal, you have to do with very great care. Now, because risk mitigation, because only one asset, risk mitigation avenues are really less, very few. So, appraisal should be a very efficient appraisal, very correct appraisal, you have to do it. Depending on the risk, rate of finance should be reduced. Yes, rate of finance should be reduced. If the risks are unacceptable, leasing should be avoided. Repossession and sale of asset is cumbersome. Yes, you can repossess. And how to find out the asset? So many banks, still they are tracing for the lost asset. Even vehicle, they are lost. Leasing companies are searching for those assets. Repossession. So the repossession and sale are cumbersome. It's cumbersome. Full insurance should be obtained to ensure safety of the asset. Full insurance should be obtained to ensure safety of the asset. Always that under leasing, they take comprehensive insurance policies. And it should be annually, yes, reviewed and annually renewed. Annually, the insurance policy should be renewed. That is the responsibility of the credit officer. Insurance of leased assets. In general, now you have to consider about the insurance of the leased assets. For the full value of the asset, you must take the insurance cover for the full value of the asset. Under leasing arrangement, so you must mention in the insurance, it is for under leasing arrangement. Insurance under leasing arrangement, you have to mention. Comprehensive cover with other specific risk covers. Comprehensive cover you have to obtain, and also with other specific covers what you think fit. Kept valid by strictly ensuring payment of premium throughout the lease period. So kept it valid. So you must see whether premium are paid regularly. Should be assigned in favor of the bank. The insurance policy should be assigned in favor of the bank. Insurance of road vehicles. Road vehicles, that is the vehicles which can go on the roads. Registered with the RMB. Road vehicles are all registered with the RMB. There will be a registration number. Comprehensive insurance cover. So you have to obtain comprehensive insurance cover plus strike, riots, civil commotion, SRCC, and the terrorism covers compulsory. Those days the terrorism covers, presently if it is not necessary, I believe. So strike, riots and civil commotion, SRCC covers are compulsory for the leased assets. Additional covers are optional. Yeah, you think whether it is flood or fire, the comprehensive cover is there. No? So additional covers, whatever it is, are optional. You can think obtain optional insurance of road vehicle. Insurance of off-road vehicles. What is off-road vehicle? Those are not registered with the RMP. And they can't go on the road. They will be carried. The sounds of vehicle, off-road vehicle, they are carried by another road vehicles from one place to another place. And to the another place, they will do their work. Example, forklifts, caterpillars, dozers, bulldozers, JCBs. JCBs also there are two. One is on-road vehicle, that is then with a tire. The JCB vehicle, one is with a tire that can go on the road. Other one is with a chain. Other one is with a chain that is used to break the stones. That cannot be go on the road. That has to be carried out by another vehicle. Those are off-road vehicles. So it's specified risk covers depending on the risk concentration you have to take for this off-road vehicle. What is fire policy, burglary policy, malicious damage, SRCC, strike, riot, and civil commotion, and the terrorism policies you have to take in regard to these items off-road vehicles. Forklifts, caterpillar, dozer, JCBs. The JCBs also there are two types. One is with the chain, that of course off-road. Other one is with the tire, that is on-road vehicle. You have to obtain. In insurance of office equipment. So office equipment also can be leased. So in that case of office equipment, insurance covers. How is the insurance covers? Specialized risk covers depending on risk concentration. What are the fire, burglary, electric shortage and short circuit. These are very important in the case of office equipment. Electric shortage and short circuit. Then SRCC, strike, riots and civil commotion cover, and finally terrorism cover. Yes, you have to obtain insurance of office equipment. Insurance of machinery and equipment, other type of machinery and equipment, specialized risk covers depending on risk concentration, fire, burglary, SRCC, and terrorism covers other machineries and equipment, Now, some additional information I have to tell you about the lease facility. The lease facility, when they gave, there is a lease agreement. There is a lease agreement signed by the customer and the bank, lease agreement. So the lease agreement is give the information about the leasing act information is given there. And there is an attachment to the lease agreement. The attachment only will give details about the lease facility. Details about lease facility. What is the lease facility, amount of lease facility? What is the lease rental? How much is the advance rental? Whether it is lump sum rental or what type of advance rental? Then what is the value? How much is the rental? Monthly rental, how much? All those details will give. And the insurance value of the asset, all those details will be given in the attachment. And so the lease agreement with the attachment. So that is the legal document. And plus, if you are taking any other security like guarantors, you have to have the guarantors bond specially drawn for these lease facilities. Usual loan guarantee bond won't be applicable, but you have to say this is for the lease facility. So especially with your legal officers, you have to design, legal officers have to design the guarantee bond. So that will go as an attachment with the lease agreement. So specially designed guarantee bond you have to prepare through your legal officers, and that should be guarantors. You must obtain the execute through the execute and attach to the lease agreement. Right. Another important thing is the substantial failure. There is another thing mentioned in the lease agreement. Substantial failure. What is this substantial failure? It is not mentioned here, that you must know. Substantial failure means there are so many things mentioned. That is, in the lease agreement, the customer agrees to keep the lease asset at a particular place mentioned in the lease agreement. This lease asset will be kept at a specified place that is mentioned in the lease agreement. Right, that is there. So when we say substantial failure, that means if the customer failed to keep the lease asset in the place, agreed upon place, one thing. If the customer make changes to the lease asset, if the customer make changes the color of the lease asset, if the customer failed to repay the lease rental to lease rental consecutively or not, if the two rentals are in arrears, that is failed to pay on time, substantial failure. So there is an important item mentioned in the lease agreement for which the customer agrees, that is substantial failure. So the substantial failures I have mentioned, if the lease asset is kept on the place where the customer agreed to keep, then customer make changes to the lease asset, either physical changes or color changes or whatever it is. If the customer fail to repay the lease rental, two rentals, either consecutively or otherwise. That is, if the customer this month rental didn't pay, next month, previous month also didn't pay, then two rentals consecutively he didn't pay. That will lead to substantial failure. Right. Then another one, customer didn't pay this month rental he didn't pay. Last January rental also he didn't pay, there was a delay. That also substantial failure. So when there is substantial failure, the lending institution has the right to terminate the leasing facility. When there is substantial failure occur, the lessor, the leasing company or the bank has the right by this leasing act has given by the leasing act that the bank can terminate the leasing facility. Anyway, before that, before that, the lending institution, the lessor will send letters to the customer. You have made this substantial failure. Kindly correct it. Either color change or whatever it is, changes to the asset, or didn't pay the installment. You have made a substantial. If you didn't correct it, we will take action. We will terminate the lease and repossess the asset. Bank will send letters. Bank will send 1, 2, 3rd letter. If there is no remedial action, the customer didn't take. If the customer didn't take any remedial action or correct his failure, substantial failure, if the customer didn't correct the failure, then the bank will send terminate. We hereby terminate the lease agreement, and you have no right to keep this asset with you any further. The bank will send a letter to the customer. We have sent you these letters. You didn't correct your substantial failure. So in the case, we are terminating the lease. We are terminating the lease, and you have no right to keep this asset with you any further. You kindly hand over the asset to us. Bank will send. So the lease agreement is terminated. So bank will wait. The customer didn't pay. The customer didn't bring the asset. What we can do then? We have to employ the repossessors, seizers. Colloquially, we call them repossessing agent. Colloquially, we say seizers. We give the letters to the seizers, repossessing agent. This asset number and everything, kindly repossess and bring it. Then they will go. Before going to repossess, they make the entry in the police station. This is we give all the details and everything. We are going to repossess it, and they will repossess and bring it. Then with the customer, of course, he can run and come and I will pay that one. Maybe depending on the bank can make some arrangement with the recover the lease rentals and other thing. Bank can just. Otherwise, bank can auction the asset, put it in the paper. Bank can auction the asset, recover its dues. Yes. And if there is any balance to be recovered from the customer, what we have recovered from the what the bank has recovered from the sale of the asset is not sufficient to pay the outstanding amount, bank can file a legal action against the customer in a district court under legal proceeding. Bank can file a legal action to recover the balance amount. So this is the procedure. The substantial failure, one term, and in the letter when it is say if it is not paying non-payment of the rental, bank can ask the accelerated payment. There is another term in the act, that is, one is substantial failure. You must know the meaning of a substantial failure, and other one is the accelerated payment. That is, you immediately make the payment. What you had defaulted rental payment, you immediately make the payment. That is accelerated payment. So the legal, that is leasing agreement. It is a vital, important thing. Leasing agreement. So based on this, now if you want to specialize in leasing, better take the Leasing Act. What I have mentioned, that one. There are some amendments also. Both it is easy to understand. Very simple English. You can easily understand the meaning. And take a lease agreement from your bank. Bank has the printed copies. Bank, for the leasing purposes, they have the printed copies of lease agreement and the attachment which you have to fill. The attachment you have to fill. That only gives the details about the lease facility. What is a lease capital? What is a lease rental? What is a period? All those, everything is there. Who are the guarantors and all those things. And the separately designed guarantee bond. So you must go through these. So this is another specialized job, leasing facility. They are making a good business. Only thing, they mostly they don't do a proper evaluation of the appraisal. They give the facility and then go and seize. They are very prompt in seizing. Repossession, they are very prompt. Right? But whereas the banks, of course, they are very careful in assessing appraisal, evaluation procedure. They are very careful and they are giving those facilities to the established customers. That is the thing. All the established credit-worthy customers are with the bank. That is the important thing. The bank, if they don't lose it, if they don't use leasing, if they don't grant leasing facility, those customers may go to the finance companies or leasing companies for those things. So they may lose their customers. So to keep the customers with them, the commercial banks also granting lease facility. But they do the appraisal of the customer, appraisal of the asset very carefully. So these are very important. What you learn today about leasing is very important for the people who are working in the financial banks. even for the finance companies or the leasing companies also, these are very important. You can do your leasing very carefully. Okay, this is about the lease facility. I hope to, yeah, if you have any question, you can ask me. For the leasing appraisal, banks have their special different type of formats for the appraisal purposes. Yeah, appraisal purposes. But banks are generally very careful in doing their leasing, granting the leasing facilities. So if you have any questions, please. There is another presentation also there. Maybe you can just go through it. There are some additional information maybe there. You can go through on your own. Yeah, but there are some English mistakes that give a different meaning. There are some English mistakes. So anyway, the leasing, the basic information I have given you. The leasing act is very important. You must go through it. And the lease agreement between the lending institution, that is the lessor and the lessee, and the leasing terminologies. But the VAT, I told you earlier, of course, the VAT, input VAT, output VAT, all those things were there. VAT credit also there. But now, no output VAT. So, bank is not charging VAT on the lease rental. But anyway, I have given you some introduction about the VAT, which is better if you know. I have given you. Right. So you can go through this one also. So these formulas are really the system developers have included these lease calculation, rental calculations. But only thing you also can develop with the Excel sheet. Excel sheet is the ALF, the number of prepayment. You can develop the formula, and similarly you can calculate. You can develop it for the lease rental calculation. You can develop. Manual calculation, calculated. There are specific calculators for the lease rental calculations. So lease facility is a very vast subject. It is very vast subject. But anyway, I have given you what is important. Now it is on you to develop yourself by reading and. But now I must tell you. Now there is another thing also I must tell you. Now the lease. I told you the lease facility, the first rental, actually rental recovery on the day the facility is granted. That is the thing we follow. Today you are leasing the lease facility. So the first rental you are charging today. And then the second rental, in the case of loan, you are charging the loan installment 30 days after the first installment. But in the case of leasing, on the same day you grant the facility, you are charging. It was the practice, it was done. But later, maybe to attract the customers, The lease facility also they have converted like this. That is, today they are leasing the lease facility and they are charging the rental after 30 days, after 1 month. But the rental calculation differ for both. But I have shown you the formula. This is for this rental calculation. What I have shown you this for when you are charging the rental installment today. On that same day you are granting the facility, you are charging the rental installment. So this is applicable for that type of rental. If the rental charging 30 days after grant of the facility, there is another formula. There is another formula that both differ in amount. The rental calculation, this one, and rental calculation, that one will differ. That of course generally like the loan. The loan you are charging after 1 month is similarly equated, similar to equated installment. That is similar to equated installment. That is the PMT function. In the computer, you may go through PMT equal sign, then put PMT, then they will ask the amount of the facility, they will ask the period and the interest rate. So that is PMT function. I hope you understand what I am saying. That will be the PMT function. So now that one also, some banks, some finance companies, some companies, what is that, some leasing companies are adapting that one also. That is charging the lease rental on the day the facility is granted for that lease calculation based on what is appearing on this slide. And in the case, some other cases, they are charging the lease rental 30 days after the grant of the lease facility. That is a different calculation, PMT function. That is a different calculation, PMT function. That also you can calculate by using PMT function in the Excel spreadsheet. This also you can develop by using the Excel spreadsheet, but workload is something higher. Workload is something higher. There is another thing now. Now here of course lease facilities you can grant for various purposes. One is income generation for the industries or manufacturing, income generation. For the cost saving, you can give. Earlier, of course, for the personal consumer durable items, of course, earlier the banks were not given, but the finance companies and leasing companies were granting for consumer durable, like car, TVs, and all those things. They were granting the facilities. But the repayment is based on the existing income. Based on the existing income, the recovery. The lease rental payment based on the existing income. But sometimes some finance companies, they consider even future, this customer will get this much of money. In future, this customer may get some additional money on that assumption. But some finance companies or leasing companies are doing like that. But no commercial banks are not doing that one. You can assume like that. You can't assume like that. He may get some lump sum amount in the third year or second year. So that time he will pay the lump sum. Anyway, so this is just for your information. So everything based on the lease rental payment based on the current income or projected income if it is a business. If it is for the consumer purposes, it should be the current income. For the business, yes, projected income for the business. Cost savings also, projected income, cost savings. It should be like that. Anyway, so any questions up to now? Okay, anyway, so I am winding up. All the best. So no questions? I am here. Yes. Anyway, thank you very much. Okay, I am concluding now. Thank you.
Thank you, sir.
Hello.
Thank you, sir.